Hi everybody, good morning. Today I will take you through the overview of the SAP S/4HANA Finance. This is the first day of the training and we will talk on the overview of what is SAP S/4HANA Finance. And this training is useful or meant for the freshers who are first time getting associated with SAP, as well as it is useful for people who have some exposure to SAP, either as end users or in another capacity. So this training today will take you through what is SAP. So what is the functionality of this ARP SAP? Then what were the issues we had with older version of SAP? And to mitigate these issues, how SAP came out with this new version of S4 HANA, and what are the benefits of SAP S4 HANA, or what are the key takeaways of SAP S4 HANA with the changing world. So let us start today with the overview. So the first section I'll go through, which is SAP and its evolution over years. So subsequent slides will tell you what is SAP and how SAP has evolved uh, during last few years. So SAP is nothing but an ERP. So ERP means Enterprise Resource Planning, and SAP is one of the most successful ERPs in the world, and it is the leading provider of business software solutions. And it is suitable to all type of industries and service sectors. It is not confined to particular industry. So whether it is the business is retail, or it is a manufacturing, or it is a public sector undertaking, everybody can use SAP. And SAP ERP is very tightly integrated. So if there are some like whole of business is divided into different departments, like for example sales, purchase, accounting. So whenever any sales order takes place and when it is sales invoice is created in the sales department, then already the accounting entry will flow in accounts. Same way, whenever any purchase is made, the purchasing entry will come to accounts. So tightly integration is there that the real-time accounting entry will happen when the business transactions happen. So it is not necessary that you have to execute any programs for separately to pass on the accounting entries. They are generated automatically when the business transactions happen in the logistic module, which are relevant for accounting. So it is very highly integrated, and it is scalability is very high for SAP. So today you have a business where you have only one office in Mumbai, but tomorrow your business increases and you have some 10 offices all over India. So to encounter this scale, the business, so business has increased over the years. So SAP will also be scalable with the increase in business. So more the transactions are increasing, the SAP can be scaled to that level. Then SAP is very security oriented. Security in the sense that if I am authorized to do particular transactions, I am a top management person, then my guy below me, the user below me, should not be authorized for that particular transaction, or a person who is dealing in cash may not be allowed to do several transactions. So that is possible through roles. So different SAP comes with different roles. So those roles can be assigned to different users, which will control whether a person will be able to do particular transactions, whether he'll be able to see particular report. Uh, so everything is done through security, and then the information is maintained in single database. So even though you have separate departments in business, for example, sales, purchase, accounts. But whatever the transactions happen in these different departments of business, uh, the data will be maintained in that single database. So there will be not a separate database for sales side. There will be separate, or there will be separate database for the purchase or the account side. So everything will be in the common database, and this will help in real-time reporting. So these are the benefits of SAP and how SAP has become more successful in comparison to other ERPs. So in this slide, we I'm like to show you that how SAP has evolved with its different versions over the years. So if you see in 1979, it was with R2 version, which was on the mainframe computers. So at those days, SAP had only started with finance module and the HR module, and it was not in all modules. So it was on mainframe computers. Then the client server came. With client server coming in picture, SAP moved to more modules and more functionalities. And then in 2004, the ERP module came, ERP version came in picture, and with each and every uh, versions, SAP kept on increasing the functionalities. So the latest in 2015, SAP has come with SAP S4 HANA. So this training or is in relation to the latest version, which is SAP S4 HANA. So these are the advantages of SAP S4 HANA at a very high level. So it has in memory, embedded in memory. So embedded in memory means that the RAM and the ROM both are together in one. So previously RAM was meant for the transactions, and ROM was for saving the transactions. So it used to take considerable amount of time. So now ROM has become part of RAM, and the system has become more faster because of this, and embedded in memory. Then it has come with a lot of things like Fiori, where the user experience has improved. So previously, to do one transactions, there were too many fields in that particular transaction that the user had to fill up and or go through, and then complete the transactions. But here, like any other ERP, it has come with different apps. So those apps can be downloaded in your mobile or in a tabloid, uh, and SAP can be the transactions can be executed. So, so those are the innovations which SAP S4 HANA has come, and with these innovations, it has become possible to do the transactions much more faster than what it was done to be done previously. So this S4 HANA is again on two levels. One is on cloud and premise. So again, cloud can be private and public. So like there were quite a few business who didn't want to invest too much in the hardware, and they didn't afford, and they wanted to have that if the hardware can be on rental basis. So SAP came out with this cloud, private and the public cloud, where you can take the servers on rent, so that you don't have to invest on servers, you just invest on the software, and uh, let the cost of maintenance and everything will be lessened down, because once the servers are taken by the third party, the maintenance also is borne by them. So small businesses and startups can offer cloud, and big businesses who can afford the hardware, and they can go for the on-premise, where the hardware maintenance and everything will be on their side, and they have to upgrade the patches and upgrade to the latest version of SAP. So it will be their responsibility. So so SAP now comes with these options. So previously this cloud option was not there in the previous versions of SAP. But in SAP S/4HANA, one can opt for whether it wants to take a cloud where it can take the rental servers, or it can go for its own hardware maintenance. So that is on premise. So with these benefits, the business has to decide that whether it has to take the decision, decide that whether they should go for concentrate only on the software or on the ERP part, and let the hardware needs to be taken on rental basis. So these type of functionalities or this type of benefits or the the option, sorry, was not there in the previous versions of SAP. So this is slide is meant for the people who do not have much exposure in SAP. So this slide shows how SAP is integrated with each other. So you have this sales and distributions, material management, production planning modules. So these all are modules: SD, MMPP, quality management, plant maintenance, warehouse management. Then on the right hand side, you have FI, finance, controlling, CO, asset management, HR. So all are integrated with each other and they sit in the same system. So whenever some transactions happen in sales which are relevant for accounting, for example, a good issue happens or a sales invoice takes place, so automatically the accounting entries will flow to FI. So the accounting entry will flow to FI. Same way, uh, whenever any purchases are made or a good receipt are made, which is these are transactions are again relevant for accounting, then again the accounting entry will move to finance. Same way in HR, if there is a payroll run and at the time of payroll run, the accounting entries at the month end should go to the finance for the salary expenses and for allowances expenses. So these are totally integrated and it will go to the finance module. So this is the integration. So now we come to straight to our finance module. So what is SAP FICO? So FICO are the two modules of on the finance or account side, and FICO module refers to finance FI, and CO is controlling. So controlling is nothing but the costing. So how do you want to cost your products in the system, or what are the cost centers report? So how many each department, what cost they are incurring, you want to know. So that is taken care by the controlling. And so FI is meant for external reporting. So FI gives you the balance sheet and the profit and loss account, and which you submit it to the external agencies, like for example to the government, to the company law board, or to the auditors. So that is external reporting. Whereas CO is meant for the internal reporting. So the business, the top management wants to know that what is the product cost of manufacturing their at this item. So whether they should manufacture this item, or if they should buy it from somewhere else. Because if their cost of production of that particular item is very high, then they should take a decision that they should not manufacture that, rather buy from other vendor. So all these decisions are taken through in the CO module, and the CO module also tells you that what are your costs incurred in different departments. So what are the cost of the HR department, or what are the cost of the payroll department, or what are the cost of a particular cafeteria which is in the factory. So these things can be created as cost centers, and cost center wise you can see what are the expenses cost incurred during the month. And these both FICO, as I told you earlier, are tightly integrated with other logistic module like SD and material management, so that whenever any transactions which are relevant to accounting happen, the accounting entries will flow to the FICO module. So we make a comparison between FI and CO. So FI is meant for external reporting. So as I told you earlier, for the outside agencies like auditors uh, and the other agencies, and they report by balance sheet and profit and loss accounts. And CO is for internal reporting, and that is a report by cost centers, cost center reports, and cost of production. Uh, so these are totally costing based. So financial accounting is external accounting where you give it to the stockholders, to the tax authorities, to the external auditors, to the banks. Banks require your balance sheet and profit and loss account or the cash flow statements, which you have to give. So this is what you generate from the FI module. And in controlling module, you do the internal accounting where the department manager wants to know what is their department expenses. The senior management wants to know the cost of production of a particular item. And there are cost controllers who want to see that how the cost can be reduced. And even there is some aspect of cost audit also happens where they have to submit some documents. So this is all taken by the controlling module. So this slide gives you the bird eye view of the organization structure. So any organization structure in SAP will have its client at the highest level. So client is nothing but how it is the highest level in SAP, and it is for segregation of data. So client has its own interpretation. So for example, a client can be the development client, quality client, and the production client. So first, whenever any configuration or everything that is done, it is done in the development client, and then once all the configuration is okay, then there it is transported to the quality client and tested there, and then finally it moves to the production client. So that is one interference of the client. And another client is like a company who is going to install SAP, so that the client is their highest level. So below the client, the company will go that I would like to implement in my 7 companies, and I would like to have a controlling area which is common across all the company codes. So it is done, and there are some several settings which can be done at client level. So for example, you have to activate the new GL accounting or the document splitting. That is a typical SAP parlance. So that is done in client level. So if it is done in client level, some configuration is done at the client level. That means all the organization, all the company codes which are below that client, they will be affected, because since it is done at the highest level. So there are quite a few configurations of functionality you activate at the client level, and once it is done, it is gets affected, or it affects all the units below it. So in this chart, you can see that there is one company code. So the company code is nothing but a legal entity. So it is a legal entity which is using a controlling area. So controlling area, again, nothing but that costing, where you do the costing. So it will have a controlling area. And the company code is having plants. So company code is again associated with a plant, manufacturing plant. Plants are associated with storage location and shipping points. And there is a purchase organization. So purchase organization is nothing but the purchasing department. So the, the company code is associated to this purchase department, and plant is again associated with this purchasing organization. So all are in are associated with each other. Same way, company code is also tagged to a sales organization and distribution channel division. And so whenever, because of this tagging with each other, the accounting entry will flow whenever any transactions happen in the sales or the purchase side. So that was the previous slide was showing you about uh, the connectivity between here. So these are the FICO organization structure. So as I explained earlier, client is at the highest level, and then it is a company. Company is a new concept where if you these are called as a trading partners also. So whenever a company is doing a transaction with another company code, then those company codes are created as company as trading partners, so that they can they can do some transactions. So this concept of company will come to later on. So chart accounts is nothing but the systematic list of GL accounts, uh, which is assigned to the company code. So once it is assigned, the GL accounts are created under that chart accounts, and the users can use those GL accounts. Credit control area is nothing but it controls the credit limit of the customers. So you want that a customer, you do not want to sell to a customer for more than 1 billion USD, then you can set the limit of 1 billion. So whenever sales exceeds that limit, the system can give you an error or warning message that the credit limit of the customer has increased, and you should not make a new sale to them. And the last is the controlling area, which is nothing but the where you do the entire costing of the organization. So client. So client is the highest hierarchy level in any SAP system, and it is a complete database contains all the tables necessary to create a fully integrated system. So it is a complete database which has all the tables. So means all the tables, not only of the finance, but all the logistic modules and everything, so that you can do the transactions at the client level in the client. So each database will represent one client, and you can have different clients also. And whenever you create a master record or any transactions in the client, they only are for that particular client. So whenever you want to create the same master record in another client, you have to manually create them. So master records are created at client level. So if you have created one vendor in one client, doesn't mean that that same vendor will be available in the another client. So you have to again manually create those vendors. So company code is nothing but a smallest organization unit of financial accounting, where you have a complete set of books. So complete set of balance sheet and a profit and loss account for external reporting. So company code is at that level where you can get a tally trial balance, and once you get a tally trial balance, you can create the balance sheet and the profit and loss account. So whenever you would like to have a legal entity where you want that financial statements at a company code level, then you should define that particular unit as a company code. So unit at which you want a tallied balance sheet and profit and loss account, company code should be created. But now with SAP, with its improvements, they have come uh, with profit center accounting, where even at profit center level also you can have a tallied trial balance and the balance sheet and profit and loss account. So other than company code, now it's possible uh, because of the new GL functionality and document splitting. So you can have balance sheet and profit and loss account at profit center level, also at segment level, and it's not necessary that you can have it only at company code level. But in the older versions of SAP, uh, you were getting issues or problems when you wanted a tallied balance sheet or profit and loss account or trial balance at a level other than company code. Uh, so these improvements has happened over the years in SAP to have the tallied trial balance and profit and loss account. So all the relevant transactions are generated and all supporting documents are required. And a company code is always by four character alphanumeric code. So it can be alphanumeric company code. So it is always recognized with a 4-digit code. So chart accounts is nothing but a listing of the accounts, and chartered accounts must be assigned to every company code. So whenever you create a chart account, it should be assigned to a company code so that users can do the transactions in that particular company code. And it is necessary that it is possible that uh, several company codes can use the same chart accounts. So you create one chart accounts in the Indian company in India, and that company may have several company codes in India. So those several company codes can, even though they are of different business, they can use the same chart accounts, which is created at a higher level. So it is possible that a chart accounts can be used. So this slide will show you more of how. So country-wise, if you see the US chart accounts is there, and the German chart accounts is there, and there are some. The organization has two company codes in Germany, which is operating. So they can use the German chart accounts, and there are three company codes in USA, so they can use the US chart accounts. So chart accounts is always at a higher level than company code, and it can be three more than one company code can use the same chart accounts. So credit control area is an organization unit or area of responsibility created to control customer credit limits, and a company code is assigned to only one credit control area. So a company code can be assigned to one credit control area. It cannot be assigned to two credit control areas, but but a multiple company codes can be assigned to the single controlling areas. So a single controlling area, credit control area can used by several company codes. So these are the basic organization structure, finance related, uh, which will help the people who are not uh, who are having exposure to SAP for the first time. So that's why I have included these concepts in my presentation. So controlling area is the organization unit defining for company's cost and managerial accounting operations, and a company code can be assigned to only one controlling area. So company codes cannot be assigned to two controlling area, but it can be assigned only to one control area. But however, a controlling area can have multiple company codes. So there are some prerequisites. A controlling area can be shared by one or more company codes. So what are the prerequisites for that will come in the later training sessions. So this is just a graphical way of showing that how client is at the highest level. So client is at the highest level, and company, then chart accounts, controlling area. So chart accounts and controlling area much more above company codes, and two or more company codes can use the same chart accounts and the same controlling area. And two company codes can come under one company also. So this is the hierarchical structure, finance hierarchical structure, and it shows you how the levels. So what is at the highest level, what is at the second highest level, and what is at the lowest level. So company code will come at the lowest level. So as and when SAP progressed in its financial accounting and reporting, they have given more emphasis on the profit center. So now the profit center has become very important, and profit center can be defined as a unit of an organization that generates both revenue and expenses. So, so profit center, when you look at the profit center, you want to see what is the profit, the net revenue of, and when you see a cost center, so cost centers are the real responsibility area for cost. So cost centers will give you only the cost which has occurred, but in profit center is much more about that. It will give you the cost also and the revenues. So you can see what is your net financial operations happening. So a profit center can be defined, for example, a manufacturing plant can be defined as a profit center. So a manufacturing plant will have its own expenses, and a manufacturing plant, a lot of dispatches, sales dispatches and sales invoice will occur. So it will have its own revenue. So you can know the profitability of that particular plant by defining it as a profit center. And several departments of that particular plant will become cost centers. Many production departments, they will have a plant, they will have office in the plant, so that will be another department. So the difference between cost center and profit center is that one gives you the cost, but others gives you cost and revenues and even the balance sheet items. So if you want to know what are your inventories and debtors and creditors at the profit center level, then it is possible. So in a manufacturing plant, you want to see what are the inventories in that manufacturing plant of the finished goods, of the raw materials, then it's possible. And what are the its debtors and creditors at the profit center level, that is possible. So it is now possible to get all the financial statements of balance sheet and profit and loss account at profit center level after introduction of the new GL. So now business can get a tallied balance sheet and profit and loss account at the profit center level. So this has helped business and SAP to be more flexible in its reporting, and it can give you the profit at levels other than the company code level. Then we come to the segmental reporting. So nowadays, a lot of emphasis has been given on the segmental reporting part, that businesses not only has to give the profit and loss and balance sheet for its different profit centers or for the company codes, but also it wants that it should give at a higher level. So for example, a company is in steel business and also in oil and gas. So oil and gas will be one segment and steel will be another. And they would like to know the profitability at steel segment. That in my steel segment, what is my profitability and what is my profitability in the oil and gas segment. So that is also possible in SAP. So segment are used as dimensions for reporting purpose, and segments are derived from profit centers. So there is a plant which is manufacturing steel. So that plant can be assigned to steel segment. And one on this assignment, even so, if there are some 5 plants who are dealing in steel, so sum total of these 5 plants, you can see at the steel segment what is the profitability. And this segmental reporting was introduced to fulfill reporting requirement for certain accounting principles such as IFRS and GAAP. So US GAAP was asking that you have to give it on the segment basis, and the International Financial Reporting Standard also wanted on segmental. So the business need of business was there to get the balance sheet and financial statement at the at segment level. So segment can be defined based on different business like oil and gas, telecommunication, retail, or segments can be on geographical region also. So EMEA or APAC region or the North America regions can become as one segment. And you want to know what is your profitability in the EMEA region or what is in the APAC or the North America region, then you can do so by defining them as segments. And you can get your balance sheet, profit and loss account, earning before interest and tax under segmental reporting. And this is happened because the new GL functionality was introduced. And this SAP S/4HANA uses this new GL functionality to give you all these. And the user will not be able to enter the segment directly in any transactions. So segments are derived from profit center. So the profit center master data has one field of segment. So whenever a user enters the segment, the profit center segment will be derived from there. So that is where the user will not be able to enter the segment in the transactions.